Hello, everyone, and welcome back to the EZ Finance channel, where we make financial education simple and easy to understand for everybody. Did you know that the average credit card debt per household is over $6,000? And most people don't even realize how fast interest adds up until it's too late. But here's the thing. Credit cards are not the problem. It's how you use them that makes all the difference. Today, we're diving into an important topic: cash versus credit. What's the difference, and when should you use each? Have you ever wondered, is it better to pay with cash or credit? Why do some people say credit cards are dangerous while others say they are useful? How can you use credit wisely without falling into debt? Don't worry. Today I'll explain everything in the simplest way possible, with clear examples, so that by the end of this video, you'll know exactly when to use cash and when to use credit to make smart financial decisions. Before we start, don't forget to like this video and subscribe to the channel. It helps us bring more financial tips to you and many others who need them. Now let's get started. Let's begin with the basics. What is cash? Cash is physical money, paper bills and coins, that you use for purchases. It is money you already own and does not need to be paid back. Examples of cash payments: paying for groceries with physical cash, giving a $20 bill to a friend who bought you lunch, paying for a coffee using money from your wallet. Once you spend cash, it's gone. There are no extra charges, no interest rates, and no debt. Key benefit of cash: when you use cash, you can't overspend because you can only use the money you physically have. Sounds simple, right? Now let's talk about credit. What is credit? Credit is borrowed money that you agree to pay back later, usually with interest if you don't pay on time. Examples of credit payments: swiping your credit card at a restaurant, buying a TV on installment payments, taking out a loan for a car. When you use credit, the money does not come from your pocket immediately. Instead, you are borrowing it from a lender, a bank or credit card company, and you must pay it back later. Key risk of credit: if you don't pay it back on time, you might have to pay extra fees, interest, and that can quickly lead to debt problems. Cash versus credit. What's the difference? Now that we know what cash and credit are, let's compare them side by side. Money you own. In case of cash, yes, you own them, but in case of credit, you don't. They are borrowed. Risk of overspending: if you have cash, you can only spend as much as you have. In case of credit, you can spend more. But if you don't pay it back on time, you will pay interest. Needs to be paid back: you don't have to pay back your own cash you spent, but you have to pay back borrowed money you spent in credit. Interest charge: you don't have interest on your own money, but you will pay interest on borrowed money if you don't pay them back in time. Helps build credit score: your cash spending don't help you build credit score, whereas your credit spending does. Best for everyday spending? Yes, in case of cash spending, but not as good for credit spending unless very well managed. Both have their pros and cons, but the real question is, when should you use cash and when should you use credit? Let's find out. When to use cash? Best situations. There are times when cash is the best choice. Let's go through a few examples. 1. When you want to stick to a budget. Example: you go shopping for groceries and bring only $50 in cash. Once that money is gone, you can't spend anymore. Why cash is better? It prevents you from overspending. No risk of debt or interest charges. 2. When buying small, everyday items. Example, buying a cup of coffee or a snack. Why cash is better? No need to swipe a card for small purchases. Helps you control impulse spending. 3. When a store charges extra for credit cards. Example, some small shops add a credit card fee, like 2% or 3%. Why cash is better? Avoids extra fees. Some stores even offer discounts for cash payments. 4. When you don't want to worry about debt. Example, you're at a restaurant and you have $40 in cash. You can only spend that much, so there's no risk of owing money later. Why cash is better? No risk of spending money you don't have. No chance of accumulating credit card debt. Warning, the downside of using cash too often is that it doesn't help you build a credit history, which is important for getting loans in the future. Do you find this information useful? Then make sure to subscribe to the channel for more money tips. Hit the like button and share this video with your family, your friends, or anybody you think might enjoy it. Let's help more people build good financial habits. When to use credit, best situations. Now let's talk about when credit is actually the better option. 1. When making large purchases that you can afford. Example, buying a laptop for $1,200, but you don't want to carry that much cash. Why credit is better? Some credit cards offer purchase protection, so if the laptop breaks, you might get a refund. It's safer than carrying a lot of cash. 2. When you want to build a credit score. Example, you plan to buy a house in the future. The bank checks your credit score to see if you are responsible with money. Why credit is better? Using a credit card responsibly improves your credit score. A good credit score helps you get better interest rates on loans. 3. When booking travel or hotels. Example, many hotels and rental car companies require a credit card for reservations. Why credit is better? Some cards offer travel insurance and fraud protection, safer than carrying large amounts of cash while traveling. 4. When earning rewards and cash back. Got the example, some credit cards give you 1% to 5% cash back on purchases. Why credit is better? You can earn free money, cash back. Great for people who pay off their balance in full every month. Warning, only use credit if you can pay off the full balance every month. Otherwise, interest charges will eat up any rewards you earned. Golden rules for using credit wisely. If you decide to use credit, follow these golden rules to avoid debt problems. Always pay your full balance on time. Never carry a balance unless absolutely necessary. Don't use credit for things you can't afford. If you don't have the money in your bank account, don't buy it. Set a spending limit. Treat your credit card like cash and only spend what you know you can pay back. Use credit for necessary expenses, bills, groceries, and large purchases that you can afford. Smart tip. If you're new to credit, start with small purchases like gas or a Netflix subscription and pay them off in full each month to build your credit safely. Now you know when to use cash and when to use credit to stay financially smart. Quick recap. Use cash for small purchases. Use credit for large purchases, travel, and earning rewards, but only if you pay in full. Never borrow money you can't afford to repay. If this video helped you, hit that like button and subscribe to the channel. Share this video with friends so they can learn too. Thanks for watching and see you in the next video.